Let's turn now to the day's top business news, and we start with the sizable drops on global markets. Crude oil prices crashing, also amid a potential price war between Saudi Arabia and Russia. To bring us all the details, we're joined by Brian Quinn from our business desk. Brian.
Well, Eve, of course, a very volatile day on Asian stock markets Monday. Massive dips on all major indexes as a sell-off that began in reaction to coronavirus fears takes on a new dimension. The Nikkei in Tokyo dropping 5% as the Japanese government reports that the country's economy contracted by over 7% in the final quarter of 2019. Chinese indexes deep in the red as well. Hong Kong's Hang Seng down nearly 4%. The Shanghai Composite off nearly 3% as China reports its January exports were down 17% on the year. Kospi and Seoul down over 4%. The big driver in Monday's sell-off, though, a huge crash on the oil markets, prices falling by their biggest margin since 1991. Brent crude futures down some 26% to trade at around $33.50 a barrel. West Texas Intermediate down over 27% to trade at just under $30 a barrel. Oil prices have been on a steady decline since the outbreak of coronavirus in China as travel restrictions and contagion fears hit demand for crude. The latest crash, though, is the result of a failed agreement between the OPEC oil cartel and its ally Russia, also hitting Saudi markets. The Saudi Stock Exchange down around 9%. Aramco, the public Saudi oil company, now off by 10%. A plan to prop up prices via production cuts fell apart over the weekend, leading the Saudis to slash prices while ramping up production. That sparking fears of an all-out price war in crude. Monty Francis reports.
Oil prices are experiencing their steepest drop since the Gulf War in 1991. The plunge, a result of an unexpected announcement from Saudi Arabia on a steep discount in oil prices to its customers in Asia, the U.S., and Europe. The move has added to uncertainty in the global markets already reeling from the coronavirus. Stocks across Asia fell as a result, as did markets in Australia, where that country's treasurer tried to put a good face on the turn of events.
And I note that some announcements by the Russians and the Saudis in relation to oil overnight, and we've seen a steep drop in the oil price in recent weeks. So there are a number of factors at play when it comes to the equity markets. But our financial system remains strong, our economy remains strong.
The Saudis' decision was in retaliation for Russia's refusal on Friday to join OPEC countries and a cut in production in response to the coronavirus outbreak, which has slowed demand for oil. The Saudis and Russians could still reach a compromise, but in the meantime, analysts say oil prices could fall further, hurting oil-producing countries across the world, including Venezuela and Iran, already suffering under American sanctions.
Well, the coronavirus on its own, of course, still weighing heavily on the global economy as fears of a new credit crunch loom on the horizon. On the front lines there are small businesses around the world, many of which are already on the brink of bankruptcy. In China, the virus's original epicenter, they're struggling as efforts to stem the contagion have emptied once lively streets and venues. Ellen Gainsford has the story.
This Beijing spa used to have between 20 and 30 customers a day. But since the coronavirus outbreak, that number has plummeted. Many small businesses in China are still feeling the pinch.
The total number of customers that we have a week is only about 4 or 5. Sometimes there's only one in the morning, or sometimes no customers at all. So we've been hugely impacted by the epidemic.
While some international corporations are trying to get back to business as usual. At least 85% of Starbucks cafes have reopened. Smaller firms don't have the resources to weather the current cash flow crisis. Restaurants and cafes have been hard hit, both by a lack of customers and by supply chain difficulties. A survey commissioned by the Beijing Catering Industry Association put the losses for restaurants and catering companies across China at 75 billion euros.
The biggest difficulty is money, because every month there's rent, salary for the staff, and the cost of supplies. We hope the landlord can scale back on some of the rent for us after the epidemic finishes.
China has more than 80 million small businesses, employing more than 200 million people. The Chinese government has announced support measures for these firms, including lower rents and a deferral of pension and housing payments. Now, China has to balance efforts to keep the virus under control with attempts to kickstart the economy.
One bright spot amid all these virus worries, the 6th happiest place on Earth. Shanghai Disneyland is the 6th Disney amusement park. It's set to resume some shopping and entertainment operations more than a month after shutting down due to the outbreak in late January. Shopping, dining, and some entertainment areas reopening as the emergence of new COVID-19 cases slows down in China. The main theme park staying closed for now, though, and all guests will have to have their temperature taken and wear a mask for the extent of their visit. Disney warned last month that park closures in Shanghai and Hong Kong could shave $175 million off operating income if they lasted 2 months. And obviously not fully back to operational, Eve, though. I know that you can get Disney-themed surgical masks. You have to find them, though. They've probably mostly been hoarded by this point, I think.
Indeed, but it would be a slightly brighter outlook on it all. Brian Quinn with the Business Update. Thanks a lot for that.